Hey traders, Nick Shaheen here, looking at Facebook going into earnings season. Obviously, headline stock. And first of all, macroeconomic thesis for me is still bullish in 2018. At least it's not as bearish as people make it out to be. We have all the underlying assumptions that should support at least current prices, if not upside. All right, so having said that, Facebook is obviously a leader. And as far as megatech is concerned, but it's now caught up in a swarm of headlines. And they are serious headlines, but with almost 2 billion users, whatever the metrics are, let's say a billion, it's hard to see them mess it up completely. So they'll figure it out one way or another. There'll be an adjustment period, and they'll come out okay at the end. All right, so recently there was a tight situation and we favored the upside, and we profited on the whooshes down because we thought it was overdone, and here we are. The concern is really very American centric. I have a lot of friends and family all over the globe. None of them care about what's going on with Facebook as far as privacy is concerned. Here we're freaked out. Fine, advertisers are here, or at least the bulk of the money, but as far as usage, which is really what attracts people to it, eyeballs, right, is not here. This is a small portion, 200 million versus the world. So it's not a big deal. They'll figure it out. The stock price will have to suffer through it. So there were two scenarios, and the downside did not come to life. The upside did. So it's at a target. These are not arbitrary numbers that I put there, lines. If I do this, I put this here obviously because it was a recent test, but more importantly, it was also a consolidation period of sorts back here. So it's likely to be a foothold. Now, this also is not arbitrary because this was a scene of an accident, one of them. This was the first scene up here. Second scene, third scene. And if I look to the left, this was the last defense. And consolidated. There was a tiny head and shoulders that came to life here with this downside also that they overshot. This transition period here was too, easy come, easy go, and this is the price they paid for it right here. So nothing is arbitrary in price action. Whatever happened, somebody says, I've seen it before, markets have no memory. That is so wrong. But anyway, having said that, there are some clues from here. So what happens from here? There are earnings coming soon, right? So I'm afraid of what they're going to say. Recently, they sound like very apologetic. They're on their heels. I'm sorry this, I'm sorry that. I've heard the politicians ask them silly questions like, what's your competition? How about you pick up the phone and call your friends and family? There's plenty of competition out there. Facebook is just a convenient way of keeping in touch with friends and family. So, that's going to continue. But for the short term, I'm afraid of what management is going to say. So they'll either tell a great story and the stock will rocket to high heaven, which is highly unlikely in my opinion. They're apologetic. They've had a big mess up. They're not going to say anything super good. They're going to try to keep a low profile and just say as little bad news as possible. And maybe they'll say, hey, we're going to reserve 50 billion for penalty. I have no idea what they're going to say. Therefore, risking money, a lot of money, is kind of reckless. I'd rather do it via some other stuff, like what? The Qs. That'll be the easiest way, because if it rallies, it's going to infect, like Netflix. It's going to infect other stocks to rally, and the Qs would be just an alternative, a way of chasing the upside in Facebook. And the Qs has reason to go. Like there's a gap up here. Well, won't they? 170. That's one easy way of doing it. So there's a trade idea right there. So for earnings. Also, specifically on earnings, the short-term reaction to the earnings headline is completely arbitrary. Even if they tell a great story, you don't know how the market's going to react. Case in point, we've seen it happen over and over. I think all the banks reported good stories, but the meme Suddenly became that, oh my gosh, the yield curve is going to invert or flatten, and therefore what we thought higher rates would be good for banks is going to be bad for banks, and they sold all of them down. Today is the first day where there might be some greens in banks from Morgan Stanley. I haven't looked if there's follow through. So we don't know what they're going to say. We don't know how the market's going to react to it. It's very arbitrary for the short term. Long term is a completely different story. But if I'm playing for the short term, for the earnings, I'd rather use longer term plays. Meaning what? I either buy the stock so I can do it long term because I have an asset in hand, or if I'm using options, which is what I do, I'd rather buy longer dated options, not one for this week. If I do it for this week, I have to accept the complete loss because I may run out of time even though I guessed right. What if I guess right and they sell it down for a few days and then rally it back up? Okay, so then I ran out of time. So going out in time would let me sustain a few lumps, so to speak. Okay, so that's one way of doing it. I would go out in time. If I'm selling puts in it, I would definitely want to make sure that I'm selling at a place where I want to own the shares. So if I look at long term, this is a weekly chart for Facebook. So it shows us where is their support. These are the same arrows we just looked at. So there's an area of consolidation. So I definitely want to hide below that. What does that mean? So if I wanted to buy it at 140, I'll sell a put at 140, and if the price falls through it, then I own it at 140. So I got paid to buy it at a discount, at a hefty discount from current price. So 16%, not a bad deal. So having said that, that's one way of doing it. I can make it a credit put spread, bull put spread, you've known it, or a debit call spread, or both. So there are ideas. But for me to allocate a huge sum of money just basing the trade on earnings is more gambling than investing. Short term. That's why I'm saying, unless I know something really solid, this is a great company. The stock looks good. It looks good for a pop. So why not leave time on the clock for me to be right? So whatever trade I do, I want time on the clock. I either buy the shares outright and be willing to take some heat, or if I'm buying calls or call spread, I make sure to leave time on the clock. Otherwise, it's just a complete gamble. Go to Vegas. It would be probably a little bit more fun. So for me, preference and options, time on the clock is better. They may cost a little more, but at least I have an asset that may have a lifespan longer than just a couple of hours. Nick signing out. Oh, if you have any questions, you can email me at sellspreads@gmail.com. sellspreads@gmail.com.